Bitcoin's price is a roller coaster. It experiences dramatic swings, both upward and downward. This volatility is inherent to its nature. It is a relatively new asset class, still finding its footing in the global financial system. Understanding the forces behind these price swings is crucial for anyone interested in Bitcoin, whether as an investor, a technologist, or simply an observer of the evolving financial landscape. Bitcoin's price is influenced by many factors. These factors include regulatory news, technological advancements, and macroeconomic trends. However, two key elements are particularly noteworthy: the options market and Bitcoin's fixed supply. These elements interact in a way that creates the potential for both significant risk and substantial reward. The options market provides insight into market sentiment and future price expectations. In traditional markets, options traders often price in a volatility smile. This means they demand higher premiums for options that are further out of the money, both on the upside and the downside. This reflects an expectation of potential large price swings in either direction. Bitcoin options exhibit a particularly pronounced volatility smile. This suggests that traders anticipate significant price fluctuations. Adding to this complexity is a phenomenon known as negative Vanna. In options trading, Vanna refers to the sensitivity of an options price to changes in implied volatility. Negative Vanna, often observed in Bitcoin options, means that as the price of Bitcoin rises, the implied volatility of options also increases. This creates a feedback loop. Rising prices lead to higher implied volatility, which further fuels demand for options, potentially pushing prices even higher. Unlike traditional assets like stocks or bonds, Bitcoin has a fixed supply. Only 21 million Bitcoins will ever exist. This scarcity is hard-coded into Bitcoin's underlying technology, its blockchain. This fundamental difference from traditional assets has profound implications for how Bitcoin's price reacts to market forces, especially when leverage is involved. When investors use leverage, they are essentially amplifying their bets. In traditional markets, the supply of an asset can often expand to accommodate increased demand from leveraged positions. However, Bitcoin's fixed supply means that new Bitcoins cannot be created to meet this demand. This inelasticity makes Bitcoin's price far more sensitive to inflows of capital, particularly when those inflows are amplified by leverage. The latest trend: Bitcoin ETFs and market accessibility. Exchange-traded funds, or ETFs, have emerged as a popular investment vehicle, providing investors with an easy and regulated way to gain exposure to various asset classes. The recent introduction of Bitcoin ETFs has lowered the barrier to entry for retail investors seeking exposure to Bitcoin. This increased accessibility is a double-edged sword. On the one hand, it injects more liquidity into the market, potentially leading to more stable and efficient price discovery. On the other hand, it also introduces the potential for a new wave of leveraged bets. When combined with Bitcoin's fixed supply and the dynamics of the options market, this influx of new capital through ETFs could exacerbate Bitcoin's already volatile nature. And with my closing remarks, Bitcoin is the next market ripe for disruption. Bitcoin stands as a beacon of hope, a new technology that will develop generational wealth globally, as a new paradigm shift enters the traditional financial economy. Its unique characteristics, the volatility smile, negative Vanna, and fixed supply, create a breeding ground for explosive price movements. The introduction of Bitcoin ETFs further amplifies these dynamics by increasing market accessibility and introducing another layer of potential leverage. While this creates opportunities for substantial gains, it also heightens the risks. The market's current trajectory shares similarities with past events like the GameStop rally, where a confluence of factors led to unprecedented price surges. However, Bitcoin's global scale, its decentralized nature, and its growing acceptance as a store of value suggest that its potential impact on the financial system could be far more profound. The coming months and years will be a critical test for Bitcoin, determining whether it can harness its disruptive potential to reshape the financial landscape or succumb to its inherent volatility.